if you're just getting back, I know I see some people still piling in. We have the great Jason Love with us of Oil Trading Group. Jason is unique, and not only does he run a trading room that's very successful, but he doesn't hold any punches. He tells you exactly how it is. Jason has been a funded trader with us, so he knows TopstepTrader really well, and has been a squad contributor, and really has just done great things. Went out on his own a few years back, and he created this great group that I know a lot of people are interested in. So Jason's going to be talking to us today about how to maximize our winning trades. Obviously something that we all want to learn. So with that and without further ado, I'd like to hand it over to Jason.
Awesome. Connor, can you guys hear me okay before we get started? Just a real quick sound check, testing. Connor, can you hear me okay?
I can hear you, and I can see your screen. It looks good.
I'm winning already, right? In the words of the great Charlie Sheen, winning.
Yeah.
Very cool. All right, so I know that we've had a pretty full plate, lots of cool people in here talking to you today. So I'm going to, what can be sometimes a little bit of a dry conversation, I'm going to try to make it as less dry as I can. And there's a lot to cover here, and so I'm going to try to condense it into some bite-sized chunks. I'm going to show you a really cool tool that we use to help with this process, and then at the end we'll answer questions and kind of go from there. So, and if we're ready, Connor, is everybody ready? Are we ready to get started?
Yeah, I think so. I think we're good to go. Floor is yours.
Okay, very good. All right, so first of all, again, I want to say thank you, Connor, TopstepTrader, and for everyone that is in here listening today that's taken time out of their schedule. We all have busy schedules, and the time, we just want to say thank you for allowing us to participate in your event today, Connor, and thank you to the people that are in here today listening to me prattle on. So, all right, so before we get started, I probably should introduce myself. There's some of you in here that will know who I am. There's some that won't. And so who is the Oil Trading Group? Well, again, my name is Jason Love, and I'm the founder and lead trader of the Oil Trading Group. We started the Oil Trading Group back in October of 2010 when I went from trading currency into futures trading. I saw that there was a need in this space, and this was almost 7 years ago, in this day trading education space. And so I have a funny story, if you'll let me tell you a story really quickly. One of the very first trading rooms that I got into, so I was like everyone else. I'd trade a little bit in the currency markets, and the reason that I got out of the currency market arena was it is so active, right? And I was a fairly new trader at the time, and there was an Asian session that traded pretty well. There was a London session that was very active, and then there was a New York session that was very active. And so as a new trader, I really didn't know how to process all of this information coming at me from all these different directions. And so what was happening is about Sunday afternoon, 3, 4 o'clock, I would, start trading, and I wouldn't sleep until Friday of the next week as I was trying desperately to watch my trades and to get in and do everything that I could, right? So I was a new trader, and I was doing what a lot of new traders do, and that was be very aggressive with my trading. Action Jackson is what I call it today, right? Needed the action. So quickly found out that that really wasn't the right way to go about it, and I needed something that was more suited to my personality, and I moved over to futures trading. And so as I was in that process of moving over into the futures trading arena, I did what a lot of you guys do and have done. I went in, I bought books and courses and educational material, and I joined a trading chat room. And in this trading chat room, this guy was a nice enough guy. He would start out every morning with his market commentary, and it was okay. It wasn't terrible. But what was interesting is that every 15 minutes or so, I would hear this unique sound that you hear from a carbonated beverage being opened. The familiar, right? So once every 15 minutes, I would hear that, so for an hour, and we would trade for 4 hours a day. So I was like, man, that's 16 of these carbonated beverages going off during the day. So this guy, I was thinking, this guy must be wired for sound. By the time this thing is over, if he's having Diet Dr. Pepper, I don't drink coffee, I drink Diet Dr. Pepper in the morning. I have 1 or 2 maybe as the morning progresses. But he was at 16 by the time this trading day was over. And so finally, after a couple of days of that, I asked him, what what flavor of caffeine do you take in the morning? Is it Diet Dr. Pepper? Is it Diet Coke? What is it? And he answered, kind of chuckling at me, and kind of said, no, 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 this isn't Diet Dr. Pepper. This is Coors Light. Right? So I said, oh my gosh. So here this guy's 16 beers into the day, into the trading morning, and I thought, and I went through a series of places like this, and I decided that, it would be good. I think I could do this better, at least from a professionalism standpoint. And so that's kind of what launched the Oil Trading Group. I started my relationship with TopstepTrader when I became a funded trader back in 2012. TopstepTrader, most of you have heard of TopstepTrader, if you have participated, but if you look back at what they've done over the past 5 years, it really is phenomenal to see the growth, the information that they provide, the way that their parameters for being funded have changed through the years, where it went from this really very, very difficult thing to get funded with into a reasonable approach and a really good approach to getting a live funded account with them. So over the years, I've seen lots of changes with them. I'm proud to be associated with them. And again, it is one of the reasons why I'm here today is I enjoy the interaction that I have with TopstepTrader and all of their folks. Also, we've helped about 24 traders become funded with TopstepTrader. I was in Chicago at the end of 2014, December 2014. I'm a huge Cowboys fan. The Cowboys played the Bears. And in my trip, I went and met with these guys for the first time in person in 2014, and we established this relationship, and we began putting traders through our combine process, and this was probably in March or April, and since then we've had about 24 guys go through our process here, which is pretty cool. So we have an online presence at www.oiltradinggroup.com. Our core trading philosophy here is really pretty simple. We like to try to determine the market direction. We identify key decision points. We use volume and order flow to determine entry strategies, and then we implement a risk management strategy that is designed around cut the losers short and let the winners run. All right, ROI and risk management. This is one of the key ideas here it's the key idea we're going to talk about here today, but it's one of the key ideas when you are trading that you need to be aware of. So again, this is not the sexiest topic. Most traders want to talk about the newest shiny object trading tool, and you know what I mean, the one that gives you the newest and hottest idea on entry techniques. But the consistent traders know one thing, and that is managing risk is the real and only holy grail to long-term trading success. It's, there are as many ways. One of the things we talk about in our trading room is there are as many ways to enter into a position as there are traders there to implement them, right? So finding entry strategies and techniques that fit your personality style are not going to be the problem. Where the problem comes in is understanding the risk part of the equation. How much am I going to risk on a particular trade, and how do I hold on for a trade to a full target, right? And that's the real, in my opinion, and I'm going to show you why I feel this way, and I'm going to show you one of the most famous traders in the world that feels the same way as I do, why that's an important component to this. So really what we're talking about is the art of asymmetrical returns. So an asymmetrical trade or an asymmetrical return is when the outcome of your trade has more profit than loss, or the risk taken to achieve the profit. Simply put, the upside potential is greater than the downside loss. Simple enough, but that's what an asymmetrical return is. In industry jargon, it is simply cut your losers short and let your winners run. All right, so I told you I was going to tell you about a trader who has made this particular idea very famous. This guy's name is Paul Tudor Jones. I'm not sure if you're familiar with who he is, but if you aren't, Google search him. You'll see that he's one of the most successful traders in the world. The little screenshot here that you see to the side is his bio on the Forbes 400 list. He's number 308 in 2016 in billionaires. He's number 120 in terms of richest people on the Forbes 400 list as of 2016. So this was, I pulled this down on January 2nd of 2017, and he has made his fortune trading, day trading, managing hedge funds and those kinds of things. So what his philosophy is simply this. he is looking for a 5-to-1 risk reward. So 5-to-1 means that if he's risking $1 to make 5, that 5-to-1 allows him to have a hit ratio of 20%, meaning that he can actually be, this is his words, be a complete imbecile. He can be wrong 80% of the time and he's still not going to lose, right? So for him, a 5-to-1 risk reward level is the key to long-term success, right? And that's what he lives by. And of course, when you're on the top, when you're in the top 400 richest people in the world and you're worth $4.6 billion and he's telling you that's the way he did it, it is a pretty good idea. At the end of the day, this is a quote from him as well, at the end of the day, the most important thing is how good are you at risk control. 90% of any great trader is going to be the risk control, right? So one of the things that I talk about, so if you were to come over to our website and join our email list, one of the things that I talk to you about, one of the first questions that I ask you is, what is the number one job of a professional trader? And most of the time, most people answer the number one job of a professional trader is to make money. And the way that I see the world and the way that I believe Paul Tudor Jones sees the world, based on what I've read, is the number one job of a trader is to protect the downside, right? Is to protect your risk. The number two thing is then to make money, right? And so we've all, and I'm going to say all of us, and you never say all and you never say no one, but I'm going to assume that most everybody that's watching this today has had an account and they've made some money and then they've given it all back. And they've made a little bit of money and they've blown an account out, right? And so that is one of those things that happens to everyone. So again, the number one job, is the way I see the world, is as a trader, is to protect your downside. The number two thing to do is to then make money. Now that may be controversial to some of you, but if you are preserving your capital, maintaining your risk, then the wins and the growth will come eventually. All right, so simple enough, right? Lose a little and win a lot. Got it. Very simple sort of strategy. Lose a little and win a lot, right? So let's talk about what this means. Do you need to be a theoretical scientist to do this, like this guy here to your left? Absolutely not. In theory, this isn't a hard thing to do, but in practice, it can be very hard. A lot of traders never completely embrace this concept. Again, if you go onto our website and spend a little bit of time over there, I go through, there are two types of traders. There's the professional trader mindset, and then there's the other guy. And the other guy is always looking for the newest, latest, greatest shiny object is what I call it. It's a shiny object thing. I'm always looking for the next greatest trade or the next greatest setup and those kinds of things, and they aren't completely embracing the concept of risk management and the art of asymmetrical returns. And so the question is, if that's really the key to success, why doesn't everybody do it? And the simple answer is, if people knew how to do it, they would do it. If they knew how to do it successfully, they would do it, right? Let's talk a little bit more about that. All right, so back before I became a trader, I'm approaching 50 at this point in my life. I can't believe it. I can't believe I look in the mirror and there's this old man standing in front of me sometimes, but I'm approaching 50 years old. So before I was in the trading business, I was the vice president of a travel call center that had 300 people. And one of the things that I would talk about to the people that reported directly to me, whether that was a director level or a manager level, who then in turn had managers and supervisors and agents under them, one of the things that I would talk about when we would look and talk about how to enhance or improve people's performance is we would talk about one key thing is how you think about people shapes how you manage those people, all right? So if you think everybody's a slacker, then you're going to manage people like they're all slackers. If you think that people have inherently want to do the right thing and they want to do what you ask them to do, then you will treat them that way, right? So if that's the understanding is that people inherently want to do the right thing, then the reason that they fall short is because they lack the understanding of how to get the job done. And traders are the same way. So the $500 challenge that I always ask is this. If I showed you 1, 2, 3 easy steps, or one step or two steps, the number doesn't matter. If I showed you the steps that you could take to make $500 and you could do that over and over and over again, would you do it? And almost always the answer is yes, I would do that, right? If you could show me how to do it, then I would go and do it. And it's really that simple. So the reason that people don't typically do this risk reward or look for these asymmetrical returns is because they don't know how necessarily to go about the process of getting it done. And that's really what we try to focus on. In addition to the entry and exit stuff that everybody looks at, we try to focus on how to train your mind and how to train your trading skill set to be able to hit these big returns. One of the things we talked about a few minutes ago, when I started with TopstepTrader back in 2012, today they have the rolling combines. But back when I did it, you paid your money, and you had, if you wanted to do the $150,000 account, you had to make $12,000 in 10 days. That's what you had to do. There was no rollover. If you made $11,950, you didn't roll that over to the next one. You had to start over from zero, right? And so they also had a number of other parameters around you, like your winning trades had to be greater than your losing trades. The time in your winning trades had to be greater than the time in your losing trades. And so what they were trying to do was they were trying to get you not only to win, because everybody can hit that one big winner. You can load up with 10 contracts and you can, put your, have a small stop and then let it run. And if it does, great, you hit your number. But then the next 9 days, you could have some really crappy numbers. And they wanted to see that you could win greater than you lost and hold on to your winning trades longer than your losing trades while you get to this number of $1,200 a day, while only losing, the max you could lose is $3,000 a day or $4,500 over the course of this 10-day period. So similar to today, but a lot more restrictive. That's how, in order to get through that process, that's how I came up with the process that I'm going to show you how to do here today, that helped, because you had to be able to maximize those returns while minimizing the risk. And I'm going to show you one of the tools that I use, and I'm going to show you some of the tools that I use in the trading room to be able to do that as well. So how do I start doing this is the question, right? And so, by the way, I'm looking up here. I don't see any questions coming in. So Connor may have already told you this, but if not, you may be asking me a question. I can't see the question coming in. Connor may be replying to you if you are asking me questions during the middle of this. I'm not being rude by not answering them. I just can't see them. So I just thought about that. So if you are asking me a question, Connor's kind of putting them together, and at the end, we're going to ask and answer the question. So anyway, back to this. How do I start doing this, right? So you've got to have, at least the way I look at the world, you have to have a blueprint to follow in order to be able to do this. And so the very first thing I want to tell you about doing this is really about work, plain and simple. Work, which leads to confidence. And if you don't put in the work, you will not have the confidence to execute doing this. And here's what I mean. So there are guys in here that are regular room members that are participating and listening to me talk about this again today that understand what I'm talking about. I am a stubborn trader when it comes to holding on to a target. I will get into a position, I have an idea in my mind of where that target is going to be achieved, and that is what I'm looking for. Now, today I got shaken out of a trade because I didn't hang on as long as I wanted to, and I'll show you in just a minute what I'm talking about, but by and large, I will hold on to a trade, and I mean really hold on to it, so that I can get to these targets. And the only reason that I have confidence to do this is because I put in the work and put in the knowledge and done the things necessary to give myself the confidence to understand my market, the ebbs and flows, the way that it goes back and forth. And because I put in the screen time and put in the work, I have a real confidence level that will allow me to hit these bigger targets. And that's what I'm saying to you. The overlapping theme here to all of this is you got to put in the work in order to get confident to do it. All right, so, whoops, let me go back one. Went too far. All right, so here's the blueprint. you have to have a plan, right? So every day that we sit down and I get started doing my trading, I have a plan or an approach that I'm going to take to the given day. The first thing that I look at is I want to determine the direction of the market. And there are three basic market conditions to deal with. There's the bull, the bear, and the chop. Now, each one of these three basic market conditions can have subsets, if you will, right? Like right now, the CL has been, the underlying theme, big picture theme is bullish, but we've been in this chop or sideways type trading for, I don't know, we've been in this for maybe 2 weeks, right? So you've got this bigger picture idea since we've double bottomed out in February of last year where the market has been rallying, but there's been this sideways kind of pattern. But there is a basic direction or lean in the market, and that's what we determine and what I determine every day. So I kind of understand if I'm trying to hold on for a big picture target, what is the easiest way that that's going to happen, right? If it's a bull market and I'm trying to get short, that's going to be a harder thing to do than if it's a bull market and I'm trying to get long, right? So hitting that target and understanding the direction is going to be key to understanding where it is that I'm going to be most successful in trying to hold on to one of my targets. Then you have to identify decision points. So we've got the direction of the market, and then we identify our decision points, right? And so what we talk about in the trade room is that these two ideas, if done properly, are really very much objective ideas. So a market that's a bullish market is making higher highs and higher lows, right? And a bear market's lower lows and lower highs, and choppy, it's making higher highs, lower lows, and kind of rotating back and forth. But that is a fairly objective understanding if you're in the right time frame and you understand what you're looking for. Also objective are these decision points, right? There's two different types. I'm going to explain those to you here in just a few moments. But if identified properly, those are objective as well. Where this thing becomes subjective is when you execute your trading strategy, right? And so everybody, like I talked about before, there are as many unique entry strategies and exit strategies as there are people trading them, right? And so if you have the right market direction, you have the right decision points, then you need to be able to execute a strategy, whether you like to fade into levels or you like to break out of levels. Again, it's the whole process, and you can ask yourself a simple question: which trader are you? If the market is screaming to the downside and you want to get long, are you buying low and selling high, or are you standing in front of a speeding train? Which, how you answer that tells you, gives you some insight into the type of personality you have. So if you buy down there, it's coming down aggressively, and you buy at one of your decision points, right, looking for that thing to go up, then you're buying low, selling high, right? If you're the kind of trader that wants to see if that level will hold, but you're looking for a breakout below that level, right, I look at that as buying low and selling high, which is anti to what I like to do. But you look at it as, I'm going to get in line with the momentum. I'm not standing in front of a speeding train. The point of that is this: your execution of your strategy can be subjective, but if you have the other two ideas, those are very objective, and they will help you in determining where it is that the market is going to go and what the best chance that you have in hitting one of these extended targets. All right, so just a quick exercise really quickly here. So I can't see any feedback here, so I'm just basically, this side says determine market direction. Is this bullish or bearish? And you decide, right? So all of us looking at this particular chart, right, all of us here looking at this particular chart would all come to the same sort of conclusion without really understanding what the time frame is. This is a high, lower highs, a series of lower highs all the way down, and a series of lower lows as structure continues to maintain itself to the downside. So you would look at this and you'd say, well, we are clearly in a bearish trend here. So that is a bearish trend. We're clearly in a bearish trend. Now, if I take the same chart and I show you this, that's the same leg that I just showed you right there. Okay? That's the 50.21 down to the 48.70. That's the same leg that I just showed you right there. But now, under a bigger time frame, what is the real direction of the market here today in this particular instance? Well, this is clearly a bullish market, right? So this was a 60-minute chart, and this, whoops, go back a step here, and this one was a 1-minute chart. Huge difference in perspective given the time frame. So the reason I show this particular chart is because you have to look, the way I see the world, you have to look from a bigger perspective to understand what the direction of the market is based on this bigger perspective, right? So if you are trying to, if you were in this, on this particular move down, right, I might be looking to try to rally this thing up because of the idea that's going on. Would it be successful that particular day? I'm not sure, right? But what I do know is that I am in line with the higher time frame idea, and that is what's key here. All right, so let's talk about your decision points. There are two different types of decision points that we look at, and I'm going to share with you the one that is, here in just a moment, the one that is going to give you a really good insight into the way that the market is. So there are traditional support and resistance levels. These are determined on your higher time frame charts. They are levels that are determined based upon the following criteria: previous areas of support resistance, right? Price action that has lingered in a certain area for a while, consolidation around a certain point on your chart, the daily range from previous days. You have confluence studies like moving averages that are crossing and connecting. You have trend lines that cross, fib retracements or extension studies. So when you take yesterday's trading range and you apply fib extensions to that, the 1.27, the 161.8, and the 200% extension from the previous day's range, those are all very strong resistance levels if you're moving up, and they're very strong support levels if you're moving down. So there are a set of traditional S&R levels that we look at. The other thing that's important about support and resistance levels is that these are zones of influence, okay? While there are times that we hit the levels to the tick, these areas should be considered zone of influence more than surgical precision. So if you look at a particular area and you say, well, you got to pick a spot to get in, let's say that's, you know, in crude, that's 52.50. You want to get long at 52.50. So the way I would look at the world, the market's coming down into that zone, and it may only get to 56, or it may get down to 46 or 42 or 41. That's still the right area, but there is that zone of influence around a support and resistance area or a level, and that's important to remember, because you got to pick a spot to get in, right? But you have to have enough risk management in place to be able to allow you to stay in so that you can maximize the opportunity, right? So they're more about zones of influence than they are precision surgical entries. All right, so we have a set of tools that we use in here that we call our market maker levels, and these are dynamic support and resistance levels. They're based on, so basically the easiest way to explain this is you have three sets of levels, and they are like Russian nesting dolls. You have the big doll, you open that up, and then inside of that big doll is another smaller doll, you open that one up, and then inside of that is another smaller T-doll, right? Nesting doll. And that's the way these support and resistance levels work. They provide you with dynamic support and resistance based on price action from previous days, the overnight session, and then into your after the open session. And again, they're based upon the previous action and time cycles, and they provide structure within the structure or decision points. Now, these are used as both entry and exit locations, and the market maker level decision points allow you to identify the big targets with the small stops. I'm going to show you some chart examples here in a few minutes, and then I'm going to show you a real-world example on today's chart, but they let you cut your losers short and let your winners run. So what are these market maker level decision points? Several years ago, I was taught this trading system in its raw form from a trader, a floor trader, who had traded in the S&P pits for about 30 years. He was a little over 30 years. And over the years, as the market has evolved from floor to electronic, this trading system has evolved as well. And so we've adapted this trading system to be as effective in electronic trading as it was for him in the trading pits. And again, this system was originally designed to be traded on the E-mini S&P. However, we use this system on the ES and the CL. And while I don't personally trade the other markets that I heard you guys talking about in here today with Connor, like the NQ, the TF Gold, or the YM, we've had students that do trade it on those markets, and they've adapted this to trade in bonds. So no matter the market, the trading system can be adapted to your favorite market. So again, there are a few things that make this system unique and in our opinion better. This trading program was developed and used by a market maker, an insider in the trading pits of the S&P. And how many other trading systems can actually make that claim? We trade this program every day live in front of you in the day trading chat room, and most vendors will provide you with tools that a trading system will not backing it up by trading it live in front of you, and that's what we do. So win or lose, and we do both, we trade it in front of you every day in our trading room. And I'm going to show you here at the end, we literally have over 400 trading videos showcasing trades of the day using these tools, and these are not hand-picked locations on the chart. These are literally trade of the day videos that were executed in the live day trading chat room. So again, we have over 400 of those. They're not all on my YouTube channel. They're all on my Vimeo channel, but I'll give you the link to the YouTube channel so you can check out a few of those when we're done. All right, so let's take a look at a few chart examples here. So this is a CL chart, and this was, I'm not sure what the date on this was, but this is just to give you an example. All right, so here is the first trade. Right, this was one of our market maker levels. The market rallies up into the support. The stop goes above this swing high. You come down. You have this swing high here. You double topped. You came down a little bit, and then it stopped you out for 13 ticks. First trade, 13 tick loss. Right. The market comes back down underneath the level, re-enter, and then you look to target all the way down to the bottom here. Now your target would be this daily structure target, and it missed it by 4 ticks. But if you came all the way down to this low, that's 115 ticks, or 9-to-1 risk reward, right? That was a 9-to-1. You risk 13 here, and that's a 9-to-1 risk reward ratio. Because I understand how these levels work, and because I have great confidence in them, this allows me to clearly identify targets to be able to hold on for these asymmetrical returns, right? So this is just one example. Even if this comes down, this is right at the close. So you see this is 1300. This is right around the close of the market. So I'd probably be looking to get out around this time anyway, but even if you let it back up above this swing high, another 15 ticks, it's still a 100-tick trade as you're trail stopping this thing to the downside. All right, so let's take a look at another one. This one was on, and you can go look at this. This was on the recent contract. This is on MLK Day. The market opens up and forms here. The market opens up and forms at the open, forms this level. You get long here off of this level. There's 6 ticks of heat down to the low. My stops are usually 11 to 13 ticks. I would have stayed in this. Now this is a holiday trading, so I'm not recommending that you're trading this day. It's just an example. Market comes down, gives you 6 ticks of heat, and then by the time the market closes on that day, it hits the corresponding level to the other side, which is the structure signal for 48 ticks, and that is, again, your risk down here was 10 or 11 ticks. It's a 48-tick target. That's a 4-to-1 risk-reward ratio and a very nice trade. So before I move off of the CL, I'm going to talk to you about today's trading ideas here. Okay, so if you see this line right here, this is today's chart. This is the daily structure signal down here at 52.62, and this is the daily structure target up here at 40. So if my normal stop is, this is just an example of how this works. If my normal stop here is about 10 ticks, this is 10 to 11 to 13 ticks. This is 51 down to 48. Okay, so that's 14 ticks. That's a little bit taller. And then if you were to carry this all the way up to the target up here today, then this target is up here for 77 ticks. So 13 ticks, that's a 77-tick target. Now, for the sake of to be completely candid, it's not the way I traded it today. Okay, so what I did do is I did get short right here. Okay, and I was looking for a target underneath. I got short right here at 40 because this ran into this structure target and it held. I got short up here. That was 7 ticks. This is 51. That was my stop, was right here at 51. That's 11 ticks. And it shook me out on this little move back up here. And I had to, basically it just shook me out. But we're at a different circumstance today, and I had this thing that I had to come do in here today. This target, which is the signal on the other side, is 78 ticks, right? So that is, again, right down to the target, right? So you went from structure target in this case down to the signal on the other side. We talked about this playing itself out in the trade room today. That is a 7-to-1 risk-reward ratio, right? Now, you would have been in this trade a long, long time on the day, but right down here at 130, it ended up right down here at a 7-to-1 risk-reward ratio. All right, so hopefully that makes sense. We're going to move on to the ES. I'm going to show you just a couple of more chart examples here of why and how we can hold on for these bigger picture ideas. All right, so this is an ES chart. So you had, again, same kind of concept. You have daily structure signal. Your daily structure target is underneath you here. You had a 1.75 stop out on this swing. You re-enter low. You re-enter on the pullback underneath this level, and it goes down 8.25 points. So that is a 4-to-1 risk reward. So you lost one at a point that almost 2 points, 1.75, and you re-enter again, and you have a 4-to-1 risk reward at an 8.25 target underneath you there. And one more idea here. You have a entry into a fade into this level, right? 2-point original stop, didn't even come close to the 2-point original stop, comes down here. That's a 2-to-1 risk reward if you take it out here. If you didn't take it out and you rode it back up here and got stopped out at break even, but then you decided to re-enter because you're holding on for this target down here, then again, the same idea. This is an 8-point move from this level down to this level here, and that is a 4-to-1 risk reward ratio. So again, that is the concept of trying to hold on for bigger picture returns. Now I'm going to show you a tool that we use that will help you better get a feel for this. So we call this the OTG Risk Analyzer spreadsheet. I also call it my desktop psychologist, and I'll tell you why I call it the desktop psychologist. I call it the desktop psychologist because losing is part of trading. We all know that. We all know that if you trade long enough, you're going to go through a day, a week, a month. You're going to go through a period where you just can't get it right. It's at that point that most traders then begin to do that thing that they don't necessarily have to do, and that is tweak their system to accommodate the drawdown that's going on. So we all go back to the workshop and we say, well, I need to add this indicator to it or that indicator to it, or I need to do this or that, or worse yet, they chuck the whole system and they move on because it went through a period of drawdown, and maybe it was an extended period of drawdown, but maybe that's just the way that it works for that particular system. And I'll show you what I mean here in just a minute. But if you stay the course and get really good at staying the course, then in the long run, I think you'll be okay if your parameters are right. So let's talk about this here. So this is an Excel spreadsheet that is designed to analyze your risk given your current trading parameters, all right? And the model, it will allow you to model what-if scenarios to determine best-case scenarios for varied trading conditions. And again, I call it the desktop psychologist because during the periods of drawdown, I use the tool as a reminder that the system is okay and that I need to stay the course. All right, so here's what this bad boy looks like. So let me grab the actual live copy of this and slide it over. So I'm hoping that everyone can see this okay. All right, so here's the live copy of the spreadsheet. And so simply put, what you are doing is you are going to, this is the 30,000 foot overview of this spreadsheet, this analyzer. You are going to input parameters into the algorithm. It's going to randomly distribute the trades based on the parameters that you put into the system, and then it's going to tell you what you can expect from a drawdown perspective, how much money you think you should be able to make, and what the system is going to do based on a particularly set of randomly distributed conditions. And each time you run this, it's going to be different. So think of it like this. If you have a trading system that over the course of 12 months averages 50% wins, okay? Some months you're going to be at 60, some months you're going to be at 40. But over the course of time, it's going to average out to 50% wins. Well, this spreadsheet is going to show you what happens when it's a little bit better than 50% It's going to show you what happens when it's a little bit worse than 50%, so that you can kind of get an understanding of what it is that your particular system and the way that your system is performing. So the first thing I'm going to do is we're going to go over here to defaults, and I'm going to zoom this in. Let's see if I can zoom this in so you can see it better. Okay, so TopstepTrader gives you a $150,000 account to trade with. Not everybody starts with that amount. That's what this amount is here, is a $150,000 trading account as your initial starting value. Your risk is 0.15%, which is basically $200, right? So every trade, your risk is going to be about 200 bucks. Your max commission is going to be 5%. Now that's way more expensive than you'll pay anywhere, right? So, but what this does is this is going to account for some slippage. In fact, let's do this differently. Let's not do 150. Let's do this a more reasonable account that the average guy may start with. We'll start it at 25K. You're going to get, and we're going to go here, instead of 1%, instead of a 0.15% risk, we're going to go 2% risk. So 500 bucks, right? So that's your risk. You're going to risk 2% of your account, $25,000 account, and this 5% is going to be $25 a trade to account for commission and possible slippage. All right? So let's take a look over here. If we go here, let's see if this is, okay. So on the far right-hand side, you're going to input the data in one of two ways. Maybe you're keeping up with your statistics on a tool like TraderView or some trade journal that gives you your trading statistics, or maybe you want to do a bunch of what-if scenarios. This is the place on this side where you do it. So we're going to start out by saying that I have a system that is going to win. When it wins, it's going to win 1-to-1, and I'm going to win 55% of the time. When I lose, I'm going to lose 1-to-1, and I'm going to lose 40% of the time, and I'm going to have 5% of my trades are going to be break even. So that's a total of 100 trades, right, at a risk-to-reward ratio of 1-to-1. Okay, hopefully that makes sense. So we're going to reset this, and we're going to hit start, and then I'm going to come down here to this button down here, and I'm going to run all trials. And so this is going to randomly distribute these trades over the course of this particular set of parameters that we ran. Okay, so it says our profit in this case is $4,300 on your $25,000 account, risking 2% on a trade, right? So this win ratio is a little bit higher at 57% versus the 55% that we plugged in. So it's a month that ran a little bit higher. So if you are 1-to-1, 55% versus 40%, then you should expect, if you are following the rules and you're following the risk management parameters, you should expect to win $4,300. Now, if you come down here, it's going to show you the trades as they are distributed. Now, the other thing that this thing is doing is it's 1% of your new balance. So if you win $500 and you're $25,500, then you're now risking 1% of that. But if you lose $500, your risk is going to go down because you're risking that new percentage on that new amount, right? And so that's how this thing goes through, right? So here's where I call it the desktop psychologist, because there is a period like this in every single system and strategy right here, okay? There's a period here. This is 56 down to 86. That's 30 trades. 1, 2, 3, 4, 5, 6, 7, 8 trades, right? 1, 2, 3, 4, 5, 6, 7, 8. That's 8 winning trades out of 30, okay? Now, I can't see you guys talking to me in here, but I can imagine that if you came into my trading room and I'm in the middle of an 8 winning trade, 22 trade losing streak, you're all going to think I'm a flake. I'm a charlatan. I don't know what the heck I'm doing. There's another vendor trying to scam me, right? So if you go 8 divided by 30, you're only winning 26% of your trades during this run. Here's why this is your desktop psychologist. This is why I say this. This run right here is expected based on your historical parameters, yet you still profited $4,300 over the course of 100 trades. That's pretty cool, right? So this is your desktop psychologist. So whenever I'm going through this phase right here, where I can't find, excuse my language here, I can't find my rear end with both hands, 62 down to 69, that's 7 losing trades in a row. I'm not panicking. I'm not throwing the baby out with the bathwater because I understand that's what's going to happen over randomly distributed trades based on my system. Okay? So let's run it again. Hopefully that makes sense. I can't see questions, so I'm going to assume that this is making sense. So I'm going to run another one for you. Let's assume that I'm only winning this time. Okay? Let's say that I'm going through, I'm a 2-to-1 risk reward. Okay? But because I'm holding on longer, I'm getting stopped out at break even a few more times than I normally would. So I'm going to go 45 as the win. I'm going to go 45 as the loss in terms of percentage, and I'm going to go 10% of my trades go to break even, holding on for a little bit bigger target. And so as the market goes back and forth, sometimes it takes you out of break even because you have a break even spot that you move it to. So I'm going to move this down to a 45% win, 45% loss, and a 10% break even, and let's see what happens over the course of those 100 trials. So it's randomly distributing it out here. Whoops. Let's go one more time. Stop this, reset it. And there's some, I've probably input a number incorrectly here. Okay, here it is. So in this case, you've almost doubled your account size with a win ratio of 47% simply by holding on at a 2-to-1 risk-reward ratio, right? Simply adding to the 2-to-1 risk-reward ratio. Now, again, I'm not saying this isn't guaranteeing that that's what's going to happen to you and all of that kind of stuff, right? But because you are holding on for bigger targets, you're exponentially increasing your amount of return. So I'm going to run it again for you. Let's say that I'm only right. Let's say that I bumped this up to 2.5, but I'm only right 35% of the time, and I'm losing 50, let's see, I'm going to lose 60% of the time, and I'm going to break even 5% of the time, okay? So we're going to reset this, we're going to start, and we're going to run all trials here. All right, even winning, okay, that says 19,000 with a win rate of 39%, right? Because I'm holding on for bigger targets, I can win, I'm losing 60% of the time. I'm only winning 35% of the time, but because I'm holding on for those bigger targets, right, I am much better off holding on for these bigger targets, right? It just gives me a much better way to go. And so, again, look at this. Because I'm only winning 39% of the time, look at all of the losing that's going on here. So from trade 4 down to trade 37, there's 1, 2, 3, 4, 5, 6, 7 winning trades. 7 winning trades out of, what did I say, 4 down to 33, so 7 out of 33. That's a win rate of 21%. But yet I'm still increased my bottom line by $19,000 because I'm holding on for the bigger picture targets, because I'm cutting those losers short and I'm letting the winners run to their target, right? All right, so hopefully that makes sense. So we're going to wrap this up here because I know we got to get to a couple of questions. So just to recap, the key to being consistently successful as a trader is figuring out how to attain asymmetrical returns. Trading requires work. There's no shortcuts to success, and the bottom line is you need to study, test, and track, and then, like it says on the back of your shampoo bottle, wash, rinse, and repeat. And then taking a logical approach to your trading, using the trading blueprint will provide you with a repeatable, sustainable process. Now I'm going to go through a couple of things here really quickly, just real fast, and then we're going to get to some questions. This is the website, oiltradinggroup.com. I'm going to give you a free ebook here on how to select the right day trading vendor. If you click here, it's going to take you to this page. And so I'm going to include, for 47 bucks, I'm going to include a bunch of stuff here, but inside of that is the licensed copy of this risk management spreadsheet, right? So there's a licensed copy of that in here. And you get an extended free trial with this, and if you don't like what we do, you move on, but you get to keep all of the stuff here. I give you one of my personal favorite setups here and a 35-minute training video on it, and then you're going to get 3 days of trade plans for the ES and CL and 3 additional days of live trading chat room. So if you've never been with us before, you're going to get 5 days in the chat room, 5 days of trade plans, one of my personal favorite setups, and that spreadsheet, all for 47 bucks. So I have a video that if you're interested in, this is Paul Tudor Jones and Tony Robbins. This is really cool. Talking about Paul Tudor Jones and the asymmetrical returns. That's a minute 26, and then we have a YouTube channel where we just got literally dozens, and I think there's 185 videos on our YouTube channel where we show you trades of the day and all that kind of stuff. And there's a video about this risk analyzer. So anyway, I've spent just about all of my time here. Connor, over to you.
Awesome. Thank you so much for that, Jason. Jason, if you can shoot me over that link in the private message,
Yep.
or I don't know if you have the ability to send to everyone. If you do,
I probably not. So I'm going to send you 3 links. I'll send you the one to the website where you can get your free ebook on, or you can get that spreadsheet if you'd like. So that's going to be link number 1 that I'm sending to you right here.
Cool.
Link number 2 is the Paul Tudor Jones video, which I it's a minute 26. It's so cool. It really does explain in about a minute 26 what it took me about 55 minutes to explain. That's why Tony Robbins is awesome. Right. And here is your YouTube channel. So these are the 3 links that I just showed you there, and they're all in for you there right there, Connor.
Awesome. And I just sent over the Oil Trading Group one. Right now is the Paul Tudor Jones one. And then lastly,
oh, bummer.
It looks like I got 2 of the YouTube ones.
Oh, did you? Okay, well, let me send you the one's my video channel and one's the Tony Robbins video. Both are right.
All right. And then did you have a link to a landing page with, I know you had it pulled up, where you could take advantage of your offers?
Yeah, so that Oil Trading Group website, that's the front page of the site, and there's that's the free ebook right there is the first thing you see. Also, so let me just show you here really quickly since I'm still sharing the screen. This is the page, and so you can fill out this area here, then we talk about our core trading philosophy, and then we go through a really cool case study and trader profiles where it says which trader are you. And so I basically created a Bill and Steve. Bill is the trader that we've all been once, and we all want to get to be Steve. Bill buys everything under the sun and doesn't stick to anything and chases that shiny object. Like the way I look at it is I like to walk my dogs in the park, and when we're all walking and everything's great, we're playing tennis with the tennis ball, and then there goes a squirrel, and they go chase that, right? And then, oh, there's another dog, they go chase that. So Steve is the guy that stays focused in on what he's trying to get done as a professional trader. So it's a pretty cool case study, I think. But that's the landing page. So if you go to the main page there, this is where you can get that ebook. It's 13 pages on what to look for when you're selecting a trading vendor, right? Some of the keys, and then also if you go ahead and push through to get a copy of that, you get a free report. You can go here, choose your own adventure book here, Connor. You can choose and just get the free report, or if you want to pay $47, you get 5 days in the trading room, plus that spreadsheet that I just showed you, plus a whole bunch of other cool stuff, and that free report, and you can go that direction. So
awesome. Yeah, no, that sounds great. Well, if you just want to leave that up or your Oil Trading Group site, that's perfect. And then I will go ahead and we'll get to some of these questions. So let me scroll up here. Looks like we got a lot. So
as I'm sitting here, I got a text message that said Mary Tyler Moore died. That's sort of sad.
yeah, I saw that as well.
That's sort of sad.
Yeah, so Eileen would like to know, do you use floor pivots?
You know, I have those as part. So I have 2 separate types of support resistance levels. I also use what we call our secondary levels. And so this is what those are. There's your daily pivot, there's your London range low, previous session low, S1, right? So these are more just kind of like reference points along the path, Eileen. So I don't really rely on them heavily, but I know where they are, if that makes sense.
Cool. And then Gabriel also says that he thinks he notices that you are using Weiss waves.
With these lines right here, they are not Weiss waves. I know what Weiss waves are. These are calculated a little bit differently. Actually, This tool itself, and we rewrote some of it, came from Peter Davies and Jigsaw. Basically, they're just a swing tool that kind of lets us know where. So, for example, this, even though this is a, let's see if I can find a really clean example of this. Okay, here's one. This is a move down here, right? 61,000 contracts on the move up, 35,000 on the way down. This would be considered, this move here would be considered a bullish retracement, right? Because the volume on the way down was less than the volume on the way up. And it's just a piece of the calculation that goes on in my head about what to be doing in terms of entries and exits. It's not a Weiss wave, but it is a wave type tool. It's a zigzag tool, a modified zigzag tool.
Okay, great. Somebody would like to know, is this tool, are these tools or setups included in your trade room?
It is. Everything is. So if you go to the package page on the website, everything that's in that package is included. So there's a thing up here called package, and if you click on that, and I just did, it'll take you, everything that's in this thing is included in the program price. And if you want to know the price, shoot me an email, I'll send you the price. Jason@oiltradinggroup.com, or you can send me down here in the bottom right-hand corner, right here, you can pop this little widget open, send me a note, and I will send you the information.
All right, awesome. And I just shot that email out to everybody and said for any questions in pricing, they can contact you directly. So.
Yeah, and so what we really encourage people to do is take that $47 trial, and you get all that cool stuff. There's lots of value there. You can determine if you like us or don't like us, and then if you do decide to go forward, we apply that $47 to the purchase price. So, but it's a really good way to get 5 solid days with this. We're going to give you some really cool content, more content than your $47. In fact, I'll show you this again. So one of the trade setups, you see if I can get this widget to pop up here. So, yeah, so when you go to this for the first time, and I've been here a few times today, so let me see if I can do this in an incognito browser really quickly here, so just so I can show you this. We'll make this full screen. Okay, those are off. So if I were to come down here and go test, see how this pops up automatically down here in the bottom right-hand corner, you could send me an email there. Or if you come to this page here, you're going to get this little pop-up here. And right here is a $1,200 video. This is a video of a $1,200 trade using this setup that I'm giving you right here for inside the $47 package. So this is a $1,200 trade. It's about a 40-minute video. We hold on forever, right? But this one trade setup is the one that we used right here, and I show you exactly how to do it, and that's part of the $47 deal that you get here. So it gives you a chance to get accustomed to our products, who I am, what I am, 5 days. We're going to give you some cool tools, and so if you walk away, it's $47 well spent, and you get a chance to do something with this as well, possibly.
Sounds good. So floor pivots. Gary says works great on ZB. So Gary might be.
Oh yeah, Gary. Gary. You're the guy I was thinking about. I can't see you're in here, but you're the guy I was thinking about when I included the ZB on there, Gary. That's funny.
Awesome. Small world. And then we talked about the Weiss waves.
So, by the way, Gary's willing, if you join, you like to trade bonds and you want those market maker levels, Gary is willing, he's said he's willing to share with you how he does it and what he does on those. He's already shared it with a few of our members that trade bonds, and we certainly appreciate Gary actively participating in doing that. So
yeah, Gary's been great. He's been here all day. So thanks, Gary, for that. And then actually, it's funny you mentioned that because Diane right after that said, do you trade bonds, ZB? So
okay, well, there you go. Yeah, I don't trade them, but Gary does, and there's a few others that do in the room.
Awesome. What study are those lines from? Charles wants to know.
Which lines? There's so many.
Yeah, I know there is. Yeah, if you want to clarify, Charles. Otherwise, I know if you go back to your chart, it looked like.
Yeah, so I've got these. So we have our market maker levels, which are. So I'm going to turn off these. I'm going to turn off these secondary levels for a second. And these are our market maker levels. These lines on the zigzag tool is a custom study that we have that's part of your membership package as well. And so maybe I'll show you that really quickly here. Give me a second. All right. So if you become a member, In the top right-hand corner of the screen up here, whoops, there's a big button that says Member Login. And if you log in, then you get this content all along the side. So there's obviously a welcome aboard message. There's trade room access. This is your trade room access on a daily basis. We have a training program that we call Price Action Volume Order Flow. There's a live training session that we recorded here. That's 3 hours long. There's a couple of PDFs. They break down the PAVOS training, and then there's that Ninja Trader indicator. We have what we call the standard indicator bundle. We don't use all of these indicators, but all of these indicators are included, and they include breakout indicators and fade trade indicators. We have a trade plan bundle that gives you your daily trade plan on an everyday basis, right? So you could click that here. And then we have the defining your trading edge. This is your market maker level. We've done, we did a live training in September of 14. We did one again in April of 16 and September of 16. So there's about, on those levels that I showed you, to be able to get in and hold on for the big targets, there's probably 10, 15 hours worth of video content here on those. And then we did a TopstepTrader Combine live in front of the room here. It was 9K in 9 days is what we turned it into a training event. And so again, there was this in here. That's about 6 hours worth. Then you get wave and volume, and we have a risk analyzer, and there's a lot of stuff that's in here that's different than even that spreadsheet. So this is all that's included in a regular membership, but these lines here are part of those market maker level studies.
Awesome. Perfect.
Sorry you asked, aren't you?
No, I get it. But Patrick would like to know, how far back do you look for support and resistance levels?
Yeah, that's a really good question. So one of the things that I look at is, and I like to go to, let's see, we go to Newsfeed. I go to investing.com, right? And so this is literally what the chart that you'll see on an everyday basis on my trade plans here, right? And the reason I like to go to this is that they give you the continuous contract, and you can go back a long, long way on this. Also, tradingview.com is a good way to go, right? But if you start to pull this in, right, you can, so I drew this right now. I drew this blue line. This is where oil is rotational around right now, right? You've had a lot of rotation here. You had a triple top, market rallied up, and it's now rotational against this support and resistance zone. So I'm going to take back into consideration lots of different places, right? I'm a fib guy in terms of retracement. There's a nice fib level in this area here, right? We're right around the 78.6. We're having a real hard time pushing through that at the moment. So there's just a number, see, that we spiked up through it and can't get back down underneath it. So there's quite a few things that I look at as I go back and try to, get some of these studies in place. But, a year is probably long enough. The closer the better. And so, but that's kind of that's just some of the process that I go through.
Sure, and that's actually a trading view chart that you were on investing.com. So
yeah, no, that's exactly right. You're exactly right.
So there you go. But Derek says, great presentation. Thanks, Jason.
Well, thank you, Derek.
Gary says, you said the spreadsheet adjusts the win-loss amounts as the P&L bottom line changes.
Yes.
But we can't do that trading futures. We can't add partial contracts, but need to wait until our equity has grown enough to add a contract. Can the spreadsheet be altered to allow for that?
Well, okay, so what it does is, if let's say you're risking 2%, okay, and that 2% of 25,000 just for the sake of ease, 25,000 is you're risking 2%, that's $500. Well, if you win $500 on your next trade, then your equity is now $25,500, right? Yep. 25,500, give or take commission, whatever, right? We're just going to use round numbers here for a minute. Sure. Now 2% is $510. So you're risking $10 more is essentially what it's saying, and that's how it's factoring this in. Is so you close a position, you have a new equity, you risk that new amount of 2%, or conversely, you lose, and now you're risking less because you lost. And so you can adjust that as you go through it on each individual trade. You can be increasing that. Now, you may not be comfortable doing that, and that's completely okay, but you can change the risk parameters inside of this spreadsheet to be able to accommodate those ideas.
Sure. Yeah, absolutely. So, Obviously, Gary, it's not going to be real time, but if you have that pulled up, shouldn't be too difficult. Shouldn't take more than a few seconds to at certain points in the day when you want to update that. So
Yeah, right. Yep. And so what I use for what I use for my to get my information, I use TraderView, right? I use TraderView, which is, I don't know, I think you've had him on, TopstepTrader, Connor. I think you guys have had him on. So if you take a look here, I'm going to run, so let me just pull this up here really quickly. Okay, so this is through yesterday. Oh, you guys can't see this, can you? Hang on a second here. So this is through yesterday. Okay, this is my trading through yesterday from the 2nd through the 24th. Okay, so I'm at a 50% win rate and 45% lose rate, and I've had 2 break-even trades. But because my winners are better than my losers, and you see my largest gain is 1180, my largest loss is 480. That's almost 3 to 1 right there. Even though I'm only winning 50% of my trades, I'm at almost 360 ticks, right? So this is I import my stats into TraderView, and then I could pull all of that information here into this spreadsheet and run my numbers based on that. So that's that. That's how I use that. So if you've got a journaling spreadsheet or something like that that you use, that's the way you can do it. That's how you get your data.
cool. And Matthew would like to know, are you still adding contracts to winning trades as they go your way, or now trading all in, all out?
That's a great question. I get asked this question a lot. And so I'm subject to the same issues that we're all subject to. And what I mean by that is I have psychology issues. In fact, you talk to my ex, she'll say the issues began way before trading started, but I digress, right? So yes, I do. I like to add to the position, but the market's got to allow me to do it. And so here's what I mean by that. If you come back into this type on the CL, man, that's ugly right there, right? So what I'm doing right now is I'm just taking them to the target. I'm not adding to positions right now because this is so choppy. But when you're back here and you've been around me a while, it sounds like, right? You've been around me for a while, where you know that I do like to add to those positions. In fact, that 9K in 9 day is exactly that idea. So when the market is like this over the course of, this is February to June, this is a scenario where, yeah, man, I'm adding to positions, right? Because this thing's just railroading every day, just straight up, right? Or if you come back in here in time when the market is, this is a great way to add to the position. So I'm a little bit more flexible with it. I'm a little bit more flexible with it depending on existing market conditions.
Great. What time frame do you trade?
I look at the big picture time frames first, but I like to trade mostly on a 3-minute on the CL and a 5-minute on the ES because you can have smaller stops. So here's what's really cool. I like to put swing stops 10 to 13 ticks over, a swing point. But those targets always remain the same. So the target's the same whether I'm on the 15, the 5, the 10, the hour. The target's always the same because those levels are based on swing points throughout the course of either trading days or the overnight session or the after pit open. So whether you're on the 1-minute or the 15-minute chart, those targets are still the same, but I like to I kind of rest in on a 3-minute chart because that allows me some smaller stops on swing points. But the target's always the same.
Okay, great. You got about 5 minutes here, so I'm going to go rapid fire too with Jason.
Yes.
What are the numbers above and below the bars?
Those numbers on that one particular chart above and below the bars, this is the number of contracts up. That's 61,000 contracts. If you see my cursor right here, that was an 88 tick move on 61,000 contracts. This is 35,000 contracts and a 44 tick move.
Awesome. Jay Cooper says, what a great deal. Agreed. Scott says, go Pack go. Scott, I'm from Chicago, so I'm booting you out as we speak.
Scott can suck it. He's a Cowboys fan.
Well, yeah, and we all know what happened to the Pack last week. So,
yeah.
But yeah, that was a tough game before. Jason wants to know, do I have to subscribe to get these OTG market maker levels?
Yeah, right now we don't ad hoc anything separate. We just put it all together and bundle it into one spot.
Okay, cool. Nicely presented, Jason. Good stuff. The $47 is on its way. Nice spreadsheet. That's from Greg W.
Oh, thanks.
Um,
Thank you, guys.
yep. Zigzag study. Not entirely sure what that means. Do you use Jackson pivots and or daily ADR high-low for defining the levels?
You know what? I don't use, so I have a little indicator that goes in the bottom left-hand corner of the screen. The other thing I want to show you real quick, this is a really cool thing that comes with one of our stuff too. We talked about volume and order flow. These are volume bars here. And so if you just look at this, from a simple, this is a simple 3-minute chart without really a nondescript chart, but when you flip the switch here and turn these on, the volume, as the more volume is pumped through these bars, the bigger and fatter they get. So that's part of one of the things that is included in what you get. Also, we do have an ADR study, bottom left-hand corner of the screen. This is going to be hard to see. This is today's range is 91 ticks. The average daily range is 130, and the 20-day is 135. You can adjust those to whatever time frames you like to look at. And yes, I do look at the average daily range for range expansion possibilities, or you know, if I'm stuck, if I'm at the top of a range, I know that it's going to be hard for me to expand that range if we're at the top of a particular daily range.
Cool. Jazz would like to know, does it work with multi-charts?
No, everything right now is NinjaTrader, although I am in discussions with Tradeovate to do some stuff with them.
Awesome. Very cool. And can you scalp with any of your indicators?
Yeah, you know, I'm not a scalper kind of guy, but absolutely, we have a particular set of breakout tools that we use. Here is one right here that is it's a very simple breakout tool with measurements on the side. Your entry here was at 86 on oil. Your first target's 83, 79. So those are small targets. But yeah, this is a scalper tool right here. Actually, it's called our market trend indicator.
Awesome. Carlos wants to know, do you personally have a daily loss limit, a weekly loss limit, monthly loss limit?
Yeah, it's $1 million. No, it's you know, basically what we do is we follow very closely the parameters that you guys provide. So if we're trading a $50,000 account, the loss limit's right around $900 on a day. And so that's kind of the parameters that we follow in here, because if you can live, so this goes to everybody, if you can live and trade and be successful under TopstepTrader's parameters, then you can live and be successful under your own trading account. And so that's kind of that's what we talk about in here, is so you know, we can't tell you from a CTA perspective how much you risk and all of that stuff, but what we can point you to is the parameters that TopstepTrader gives you for the $10,000, the $30,000, the $50,000, the $100,000, and the $150,000. If those are your trading account sizes, look at what they do and what they tell you you can and can't do, and let that be your guidepost to whether or not you're trading real money or a combine or their money. If you can be successful trading with those parameters, you're going to go a long way.
Awesome.
Yep. Being successful.
Thank you for that. And for those of you just off the top of my head right now, generally our parameters are 2% of your total account balance as a daily loss limit, and then we do things as a trailing max drawdown, so trailing your high water mark. And generally we don't want to lose any more than 4% of that, you know, in a given week or time period over an account. So just so you know, 2 and 4 as a general rule of thumb, always smart. But other than that, moving forward, can the NT trade execution spreadsheet be imported into TraderView?
No. So just, I guess the answer is, if I don't know exactly what you're talking about, then the answer is probably no.
I think we're kind of confusing two separate things there, because we brought up the TraderView, but the NT trade execution spreadsheet is awesome in and of itself, Siraj, so definitely take advantage of that. And then lastly, and we're coming in with a minute left, here we go, is, somebody else just came in, but does it work with NT8?
Not yet, and here's why. Not yet. We were planning on rolling out in the second quarter for NinjaTrader 8, and the reason for that is we want to make sure all the kinks are hammered out. I had a really not a terribly good experience when it rolled from 6.5 to 7, right? And I ended up spending a lot of time and energy and effort, and it wasn't right, and then I had to redo it all over again. So we're just going to make sure that all the bugs and kinks are worked out, and we're going to roll it out to NT8, the first part of the second quarter.
And then just lastly, out of Louise, and then we'll let you get going, and we'll jump on a break here. Do your targets repaint?
No, the targets once established. So here's a good example, right? So these are your daily structured targets here, right? And they form right after the pit open. So here's pit open on the CL at 8 a.m. Now they stayed the entire day, right? So these targets, et cetera, stayed for the entire day. The overnight levels, just going to put those on real quick. They formed up they formed up when this market closed for tomorrow. So when this market closed, you got a new set of market targets. These stay this way into the entire overnight session and into tomorrow. And so they provide structure, et cetera, for the overnight session. So they don't repaint until you get to the revisions, and then those repaint at certain intervals. So I don't know if that's a very clean way to say that, but that's what it is.
Awesome. Well, I think that is it. We will end on that. But Jason, thank you so much for your time today. That was excellent. I know a lot of people are interested. Check out Jason at oiltradinggroup.com. And go ahead and check out, take advantage of that free ebook, and then, jump on his trial and see what it's all about. So thanks so much for your time. Go ahead.
Yeah, hey, real quick, just I've gotten several emails here. It is 3 o'clock Central Time. If you purchased the $47 thing, you get access to the content immediately. I've got a few questions. I got a number of emails with questions and things like that. I got to go get my son from school, and then I'll come back and I'll hammer out all the answers to your questions. So give me about an hour to get to your questions, and we'll go from there.